Germany's economy minister says he wants to continue with the funding of multi-billion euro economic projects. That's despite a recent court ruling preventing the government from repurposing leftover funds raised to fight the pandemic. The ruling triggered a crisis over the government's budget for next year, as it cannot raise new debt due to a constitutional so-called debt break. Robert Habeck said the federal government and the states of Germany are working together to find a way to keep money flowing to the projects, describing them as affecting the economic heart of Germany. Here's more on what he had to say.
The projects within the Climate and Transformation Fund concern the heart of Germany's economy. The economic data behind this has become common knowledge. Due to the loss of the 60 billion euros expected from this fund, we're expecting economic growth to drop by at least half a percentage point this year. And this trend will continue in 2025 and 26, if to a lesser degree. At this point, we have to defend the substance of Germany's economy. And we have to build trust in our businesses across the country.
Let's get the view of Carsten Brzeski on this, chief economist at ING Germany. Welcome back to the program, Carsten. Half a percentage point less of GDP growth thanks to the government's budget crisis. That's what the economy minister is predicting. Is that realistic, or do you anticipate a worse impact?
I think it's going to be even worse, Chris, because yes, 0.5 percentage points impact is realistic given the size of the 60 billion euro hole, because this 60 billion is around 1.6% of GDP. So some kind of austerity measures would clearly already lower GDP growth by 0.5 percentage points. But this is not everything. It is also about uncertainty that has gone up through the roof again. So uncertainty amongst consumers, uncertainty amongst the corporates. So given this policy uncertainty right now, there will be even more of holding back investments. There will be even more holding back of consumption. So I think that 2024, if we won't find a quick solution for this fiscal issue, 2024 will be worse than 2023. And for 2023, I think we should already expect a recession by around minus 0.5%.
Now, the economy minister is promising that all financial support promised to companies trying to transition towards a green economy will be upheld despite this very difficult fiscal situation. At what cost?
Well, either at the cost of maybe a falling of the government, otherwise at the cost of higher taxes or expenditure cuts elsewhere. I think that where's the status quo right now? The status quo is that there is not enough money, also not in the 2024 budget, to fund all the plans that the government had announced. So that is a fact. So either now the government can deviate once again from the fiscal debt break, which I think they won't dare to, and which legally will be very complicated. Otherwise, they found a structural solution saying, all right, let's go for a complete makeover of the debt break. But for this, they need the opposition, the CDU, and I think that's also not going to happen. So then the only thing is, if you have to do it with the money that there is in the budget, it means there are more expenditure plans than money coming in. So this means other expenditures, like, for example, social care, but also the Bürgergeld, which is kind of social benefits. This should be cut again, or they would have to start talking about higher taxes, something the Liberals, the FDP, have ruled out so far.
So it is quite a tricky situation for this three-party coalition there in Berlin. Now, support for families and companies dealing with high energy costs has also been coming from a debt-based fund, and this support is running out at the end of the year. What sort of impact would it have if these subsidies were not reinstated, as the finance minister is indicating?
If this was to happen, then we would move into an even worse recession in 2024, because this would mean, of course, all depending on what energy prices will do in the first month of the year. And this depends, of course, on the weather. Actually, by the way, it's snowing right now in Frankfurt, so it's getting colder. But if there wasn't any support, just the numbers would clearly push down economic growth. would push down the euro, the German economy further into recession. That is one thing. But the other thing is uncertainty. If this means that that companies, that households can no longer plan, can no longer take government decisions, announcement into considerations, it means we're going to move even more to a standstill of the economy.
Carsten, let's talk about the debt brake here. You mentioned it before. Now, the debt brake is a fiscal ruling enshrined in the German constitution, and it says that the amount of fresh debt Germany can take on annually is capped to 0.35% of the GDP. Is that ruling supposed to stay in place, in your point of view, or does it need a reform?
When you look back, Chris, the debt brake came into living when we were in the euro crisis, a sovereign debt crisis. Germany wanted to lead by example, and I think rightly so. So Germany showed, listen, we can do austerity, so please follow us. And this was trying to solve what back then was a sovereign debt crisis. Right now, we don't have a sovereign debt crisis, but we have a growth crisis, we have a structural crisis, we have a loss of competitiveness crisis in Germany. So I think the fiscal debt brake is outdated. So either we're going to change it and, for example, include some leeway for investments, for future-oriented investments, to tackle the climate change challenges, to move further into green transition, digitalization. We all know the structural problems that Germany currently has. So either you completely abolish the debt brake, or you just adjust it to the new times. Because what is also interesting, I think the rest of Europe is looking at Germany with some kind of amazement, because where is German debt to GDP currently? We are at 64% of GDP. When you look at France, Italy, Spain, the number 2, 3, and 4 of the Eurozone, they have debt to GDP ratios far above 100%. So it is a completely different world. So somehow it looks like a self-inflicted self-demolition of the German economy right now.
Carsten Brzeski, Chief Economist at ING Germany. Carsten, as always, thank you for your thoughts.